Good day, everyone. This is Patrick from EasyFX Code Training System, and this is Sunday, the 22nd of August, 2021. And this is an educational video on the analysis, chart pattern analysis of the Aussie dollar. And after yesterday's weekly analysis of the major pairs, I thought that I would do a more extensive analysis of the Aussie dollar, as I did a very short analysis on the Aussie dollar with the projection to the 200 pip extension area of this flagpole with a bearish pennant. So I wanted to do a full analysis, not just on this pattern, but since the March of last year, where the pandemic hit and the rise of the Aussie dollar, and now looks like there's a decline and further weakness in the Aussie dollar. All right, so this was just a quick refresh. This was the analysis yesterday, with this fib here from the high of July down to the low of July, swing low of July, and a pullback into a 38 fib retracement, and then now starting to break out from this pennant, and already just hitting the 162 fib extension, and I was projecting that it could dip down to target the 200 fib extension near the 70.00 round figure, based on this height of this flagpole. All right, so let's continue with the about some of the major indicators. I remove some of the indicators here, the weekly pivots and so on. And basically, this was the same analysis here, with the high right at the 76.00 and dip down to the low of July near the 73.00. So that's about a 300 pip move, and if you extend that, so that's target is likely going to be in the 70.00 area, 300 pips down. That was the projection. And let's go further back to where it all started. If we go to the weekly time frame, that was the low in March 15 last year, went down to hit a low of 0.5508, just near this low here at the 55.00. Since then, there's been a strong recovery and a bounce back up until it climbed back into the 70.00 area. It paused there for a while, with a pullback into the 68, and then continued higher before pulling back to retest this breakout area of 70. So we'll know that 70 is going to be a key support zone after this breakout and pullback. So it's a psychological level here. And after a double bottom, it broke out higher. All right. So let's take a Fibonacci analysis of this move here. Let's go back to the daily time frame. We take this Fibonacci level here, Let's look at the array down to this swing low and up to this swing high. Let's change that to red here. Okay, so using this full range from 55 all the way up to 0.80, that's 2,500 pips here. And it has now retraced back towards the close to the 38 pip here. That's at 0.7052. Right, it's heading towards the 38 pip. And if that's going to be the key support area below that at 70. We'll see if it's going to break down further towards the 50 pip retracement of this whole move, of this full swing move. There's the 50 pip retracement here at 67.57, which is also a 262 pip extension of this move that we're measuring now. That could be later on. There seems to be some confluence here with the 6800 area. Right, let's continue with this analysis first, starting from this move up. And as it moved up into this area, into the 70 area, after it broke out higher and then pull back to retest with almost a triple bottom here. Let's expand this. Right, they climb up to hit the 74.00 and then pull back to 70, form a triple bottom, actually multiple bottoms here on the daily time frame, and then climb up higher. So this area here, we can actually draw another trend line. Which is basically like a descending triangle, or slightly slight descending wedge here, but almost a flat bottom here, so a descending triangle. Where it broke up from this level, it bounced off the 70, finally broke out higher from this trend line and climbed all the way up to the 78.00. Now, why did it move up to that level before finally moving up to the 80? We can actually go Fibonacci retracement here, reversal. Let's change this color to say green. And from this reversal move, that's the 100 pip here, broke out to hit the 200 pip exactly up here. So that's double this height. And after hitting the 200 pip, pull back into the daily 55 EMA, right at the 138 FIB retracement, and form one more higher high to hit the 80.00, slightly higher than that, before pulling back down below the daily 55 again, and then consolidated around this area. Okay. This move up to the 70, just to show you, this is also a previous swing high, so that's why it climbed back up to target that area, right, before attempting to break out higher. Okay. So we already know that 70 is going to be a key resistance, then support. Now, in this area now, it did not extend further. It hit the 80 and then did not reach the 262 FIB extension of this reversal. So it stopped here already. And just looking at this chart pattern here, it looks like a head and shoulders here. There's one right shoulder with the neckline here, right at the 138 FIB area. But you notice that it did not continue lower from here, did not break the neckline, but instead it continued higher and broke out higher above this right shoulder. So actually this void the left shoulder here, so the right shoulder here. So this instead formed the right shoulder. So that's the left shoulder. And right here is the right shoulder with the head right at the peak. And only when it broke below this level, then that's the neckline. Okay, but this was over from the start of January, right at the beginning of the year, peaked at the end of February, and then the right shoulder around early May, and then only broke down in June. We'll see where that ended up at. Okay, let's clear this first. So before we find the extension, notice also there was some trend line that we can actually draw here to show the support where it could not break below the neckline. And above that, there's also a lower high. That was the right shoulder, a valid right shoulder. Then here, there's another rising trend line, almost in a slightly bullish channel here. But right at this confluence, that's where the weakness started. and started to fall until it broke below this trend line, this low trend line here. Okay, so now let's draw another fib. This will be the fourth fib here, with the low right at this neckline. And let's change this to running out of colors now. Navy. Now the head and shoulders target bearish chart pattern. The target is going to be also 200%, 200 fib. So it's a double of this height, and that brings us down to here, right at the 200 fib extension. That's at the 71.19. So we see a confluence of two fibs here at the 200, which is this height of the head and shoulders, and the 162, which is this bearish continuation move, and that's at this zone here. So potentially now there could be a pullback and bounce, and that's why there could be some consolidation before it attempts to target and the next move into the 70 area, where this 200 fib is of this flagpole move now. Right. So far, it has managed to achieve this target, move down to this level here at the 200 fib. Okay, so we'll see after next week. It may take a couple of weeks before it attempts to break down lower. And it also basically depends on the strength of the US dollar over the next week or so. See whether it's able to reach this 200 fib. But as you can see, after hitting the peak, it took a while, took a few months, up to 5 months before it formed a valid head and shoulders pattern, and then a break below the neckline. And then finally hitting this 200 fib area. Okay. So out of all this movement, there's been a lot of chart patterns that we can see. And actually, if we draw a fib from this swing high to this swing low, that's the full retracement, the 100 fib retracement of this move. So that's the at the 70 area, just slightly above 70. Okay, so I didn't want to add that because we've got enough fibs here. We've got 4 fibs already. So all these moves basically was driven from fundamental news and fundamental reasons. Aussie dollar really strengthened that till the early part of this year before it suddenly hit the brakes. And then now with extended lockdowns, with this new wave in Australia, that's going to impact the economy. And the RBA was actually going to start tapering next month in September, so we'll see if that's going to continue or whether it's going to be delayed. If it is delayed, then that will further weaken the Aussie dollar, and as the US dollar strengthens further, that's going to cause more grief for the Aussie dollar here. Let's zoom out a bit more to see 70 is definitely a clear target, but below that, hard to tell whether it's going to extend and move into the 6800 area where the 50% retracement is of this full swing from the high and low. Right, but we'll keep our eyes on the 70 first before the next move down, because 70 is definitely a strong support level. Okay, so I hope this helps to identify some chart patterns here. We've got ascending triangles, we've got bullish channels, and actually also a triangle consolidation up here. We do have a head and shoulders pattern. And then we've got the bearish pennant and a breakdown lower after consolidation. So hope this helps, and we'll watch for any other key patterns in other pairs, and I may analyze in more detail for those as well. Okay, so hope this is of use for you all and in your analysis and your trading. So have a good trading week, stay safe, and cheers for now.